Let's see if we can get this better. Alright, so I'm going to make some drawings on here just to see how well it is being reproduced. Oh, that seems a lot better. Yeah. Can you hear me okay? You guys can hear me? Yeah? A lot better. The change of the perfect now? Okay. Alright. Sheesh. Sheesh. Alright. Well, it's nice that now you guys are, looking at what I'm looking at because, geez, I was chatting about here, Roblox, okay? We put the arrows here. The idea was this was a perfect area of buying by the institutions. They created this area of buying by the institutions, and we had forecasted with these arrows that we were likely going to see a big push to the upside here. So that's what's taking place now. And so just goes to show you the power of what we got going on here. Like, do you think when they were creating these momentum shifts and demand areas that they knew the price was going to go up? Yeah, I think so, because these were areas of buying that they had. Okay, so definitely they were doing that, preparing for that. All right, so that one's doing well. Here's the other one, Crowd, that I got my eyes on. When we look at the daily chart, we have this area of supply removed, so that opens up the floodgates now for price to continue higher. All right, so this type of situation is what we're looking at now. Okay, so I was looking at the options on these, and I post them in the channel. Let me just bring them up. If you've seen our YouTube channel, or sorry, the Telegram channel, MRNA crowd, here's the one that I was looking at. This one that is an interesting one that I want to keep my eyes on. Okay, that's the one I want to look at. November 19. We are 9 days away from that. 300 call. Okay, 300 is just above price now. So I'd like to see how this one, at the time 585, 610 is what they were going for. So I wanted to see what how this one was going to play out in the next week or so. And then we were looking at PayPal. PayPal dropped and contacted demand. So I was looking at a PayPal option. This one here. This one's January 21 call option. Okay, so what are we talking about here? Well, every option you buy has an expiry date. Okay, so this option is, I have the option to buy something for 230 bucks in the future. Between now and January 2021, I have the option to buy PayPal stock at $230. So why would anybody do that? If PayPal stock is $206, why would anybody buy it for $230? Well, they wouldn't. Okay, not unless price went above $230 would this be worth having. So, but that's the thing. When it's not worth having, it's very cheap. When it becomes worth having, it becomes very expensive. All right. So that's why I want to see this, because right now we've just contacted a major buying area by the banks. So the fact that this buying area has been contacted, I'm suspecting that over time we're going to see momentum build to the upside, which is why I'm looking at this here. So you can get it at $5. If price, just recently we had price, well, you look at the date here, right? And we're looking at November, early November. So the beginning of early November, we've had price at $230, right? So not only can we get this to about $15, maybe a little bit less because of time decay, I don't see any reason why this won't go up even higher than that, okay? Let's get rid of that. I don't see any reasons why this won't go up to 250 and even higher, okay? So that's why I'm giving the extra time there for that to happen, January 21, 2022 call options, because this can go, I believe, to 20, 30, 40, 50, all the way up there over time. So that's why I'm watching this one. So that one is a very interesting one to me. And then we were looking at this one here. So again, RBLX, when we were looking at it, entering into demand, beginning of November, these options were less than $5. Okay? These options were less than $5 down here when we were looking at this chart. These are January, again, 90 call options. Why 90 call options? Well, again, because price was down here, but when you look at the dynamic of the chart, if it was going to go up, look at my arrows. It was above $90. So the expectation was that price was going to go higher than $90, right? How do I know that? Well, again, when you look at the charts and you look at the opposing zones, all right, and you know what's been tested, what has been tested, what's compressed, you know where price is going to move towards with high degree of certainty. So that would enable me to buy options for very cheap, okay, $4.50, and a few days later it's selling for $23. Okay, that one was a beauty. That one worked out extremely well. Let me see. So Ronaldo, it seems much better. Probably the problem that you don't have a fast enough internet to stream at 60, but 30 frames per second seems to be good enough, isn't it? Seems to be. Kevin, have you found any broker that's good for options trading? Yeah, I like Interactive Brokers. I used them for many years. When I first started trading, Interactive Brokers was my broker. Okay, so I enjoy them. I thought their fees were decent. Very reputable company. If you wanted to short stock, they were one of the companies. They were one of the brokers that you would be able to find stocks to short. All right, so they're decent. Their fees are decent, reputable. That's the company I'm going to be going with. I'm very interested in learning options. Yeah. So options is very, very interesting. Provides lots of opportunities if you know what you're doing. It's one of the fastest ways to build up an account. Okay, because you saw the example with Tesla, right? Tesla was a perfect example where when price was here, we had forecasted that this was going to be removed and price was going to head higher. Okay, that's what we forecasted. So knowing the move was going to move up like that, getting call options with a strike price of 1,000. What's a strike price? What does that mean? Well, it means that that's the price that the option is allowing you to purchase the stock for in the future. So if price is $800, who the heck wants a contract that allows you the opportunity to buy Tesla stock at $1,000? Nobody wants that. You could buy the stock at $800. Why would you want a contract that allows you to buy something at $1,000? Well, the reason being is because at the time when the stock was $800, having a contract that allows you to buy it at $1,000 is only worth $1. Okay, it's very cheap. All right, because it's out of the money, what they call out of the money. You know, you're already at a disadvantage because the price of the stock is cheaper than what the contract would allow you to buy the stock at. So you're out of the money. That's why the contract is so cheap, because who the heck would want it? Well, if you know what you're doing and you understand how the markets move, you could take advantage of that. Okay, there's great opportunity in those out of the money options, because number one, they're cheap, but when they do move in your favor and price does move above your strike, guess what? They're worth a lot. All right, they become worth a lot. It went from being $1 to $90. Okay, you know what that means? You invest $1,000 into that option, and 4 weeks later, it's worth $90,000. Okay? Where can you invest $1,000 and get $90,000 within a month? Okay? That's what you can do with options. So options is very, very powerful. But you see, that $1 option could have went to $0 as well. Okay? Why? Well, because price was hitting an institutional area of supply. Now, taking the larger dynamics from the higher time frames into consideration and looking at the market at the time, we knew that price was going to break through this supply. But if that wasn't the case and this supply was actually going to be used to drop price, what do you think this option would be worth? Okay, buying an option that allows you to buy in the future Tesla at $1,000 when it's at 800 is worth $1. But you know what happens if price drops from that 800? It becomes 80 cents, 60 cents, 50 cents, 40 cents, 30 cents, 20 cents. Okay, and it goes down to zero very quickly. So if you don't know what you're doing, your $1,000 can turn to $0 very quickly. If you do know what you're doing, your $1,000 can turn to $90,000 in a month. So, and the exit signal for this one was very, very obvious. Right here. Exit at 1144 to get out of this, the option. So that worked out very well. Would have been less than 90K, probably somewhere in the 80s. I didn't double check it to see what it was by the time the exit signal was there. But that's what I'm talking about. When you say $1, that is really $100. When I say $1 for what? Sorry, not too sure what you're talking about. Okay, so Walmart, so that was Tesla, Nvidia. We saw a major rally in that, pulling back just like the other ones. Everything's pulling back, right? We know it. We can see it in the big markets. There's those pullbacks, so it's nothing significant, just a slight pullback. And look what's happening with Apple stock, or Amazon. Which one was it? Amazon. Okay. Look what's happening now. So we have institutional supply here. Okay, the first test of this supply was here. Okay, the second test of the supply is deeper. You know what this looks to be setting up to do? Move higher. Okay, that's what I'm saying. So it looks like it's going to be breaking out, and not too surprised by that. Again, you look at the S&P, it's pulling back, but only the 4-hour time frame has been broken. Daily, everything else is still holding very strong, so no reason to suspect that price isn't going to continue higher. So Amazon setting up to take off. Okay, so what would we be looking at? Well, there's a few things you can look at. The first thing is that if I was to look at this weekly chart, okay, look at this here, okay, like this. So the first thing I'd be looking at is waiting for this area of supply to get taken out. All right? Because once it's taken out, then you know it's clear sailing. How far does it move? Well, you take a look at this to here, you look at that distance, and you can pretty much say, you know, we're looking at about 4,400. Okay? So how about 4,000 call options? Right? How about a 4,000 call option? So what you'd be looking at is, where's my software? Let me get that up. Let me show you how this is done. So Tesla, 4,000 call options, or Amazon, 4,000 call options. Yeah, exactly. So listen, when you're investing in options, okay, the big problem that most traders the big problem that they have is that they say, oh wow, you could turn $100 into $1,000. Yeah, well, you could also lose $100 very quickly. So if you have a $500 account, you don't really want to be investing, you know, $250 in an option, because you can lose that very quickly and half your account's gone. So what you do is you would trade in a similar way that you would with currencies, where if you're only willing to risk 1% of your account, then that 1% is what you put into an option. Okay? You can even invest more, because you don't have to let your option go to zero until you get out. You can get out at a loss, but it's very difficult to time getting out, because not only do you have a price on the chart moving against you, that's reducing the value of your option, but you also have time passing that's reducing the value of the option. So if you have a $100,000 account, you're willing to risk 1%, which is 1,000. You can open up a $2,000 option trade, but just know that no matter what happens on the chart, you're cutting it off at $1,000. Okay? You can do that as well. There's many options. So Amazon options, call options, $4,000, right? That's what I was saying. Strike price of $4,000. So as you can see here, there is no $4,000 available. Okay? The reason being is because most people are trading these strike options. They're like short-term trading it. All right? So right now, price is at 35.88, and you take a look at what we got here. Let's get that back. Let me see, that supplies at 38. Okay. So I mean, if you don't know what you're doing and you're trading Amazon right now, call options, you're making the assumption that this supply is going to be removed. It has not yet happened, but you're making the assumption it's going to happen. So just because of that, there's risk in this. Okay. Also, if you look at the S&P, you can see that 4-hour chart has already been broken down. Everything else is good, so there's momentum there, but with this supply still in play, you're taking on serious risk because it has not been removed yet. If you're seeing correlations in the market that prove price is going to go up with high degree of certainty, then you can take on trades like this. But I would be careful with that. So November 19, that means if you're expecting a move up, it has to happen in 9 days. All right, preferably less than that. Okay, so let's say you chose a little bit more further time out. Right, when you look at the options, you can see the ones that are very close in 9 days, expire in 9 days, they're not that expensive. They're in the 50s and 60s. Right, you go out to December, you got hundreds, 140s, 170s. You go out to an expiry date of January, now they're going into 120s and 60s and 220s. Okay, so let's look at an option to buy right now at 36. Okay, so let's say 36. Right now we got volume 236 here. All right, this is the one, $170. Okay, hourly chart is this one. There we go. So this is the option that I'm looking at right now. So if you were to buy this option, what you're hoping for is that, you know, price is going to go above $3,600, right, between now and January. If this supply gets taken out, that's exactly what's going to happen. All right, it would do that. So I still gotta figure out how to move throughout this this chart here on this broker. So right now you can buy this option for 170 bucks. Okay, buying this option for $170 is a lot better than buying a stock for $3,594, right? So you see, one of the great things about option trading, you could take advantage of moves that you suspect will take place in the markets without having to spend so much money to buy the stock to make that move, right? So $174. So I'd like to take a screenshot of that because I think this is a good one. And we'll save that one. AMZN options January. What was the strike price on that? 3,600. So that's decent. Now, personally, I would much prefer to wait until the supply gets taken out. Once it does, then it's clear sailing to the upside, right? I'd much rather prefer. But from what I'm seeing here on the chart, and what I know to be true about when price makes these higher highs like this, it leans towards eventually, you know, potentially coming down and then doing that. Okay. So let's see. You got some questions here. Let's see. When you spend $1 for one option, is it that you are really investing $100 of your money because you are purchasing 100 shares, or am I getting this wrong? Not quite sure. Well, if you spend $1 on an option, options is a dangerous game. You need to have an advanced understanding of game theory. Options is a very dangerous game. Yes, very dangerous. Well, it's like anything. If you don't understand how to play it, then yeah, it's going to be very dangerous. If you don't understand what to expect from the markets, if you don't have a good understanding of how the markets move and why they move the way they do, then you could be in big trouble. Yeah, for sure. I think I don't remember. It's been so long since I've traded options, but is one option for 100 shares? I'm not sure. I'm not sure. I have to double check that. Okay. I remember hearing that before, but I'm not sure. Does anybody here know? How many shares does one option control? Let's just type it in. How many shares does one lot of option contracts have? For stock options, a single contract covers 100 shares. Yeah, 100 shares. One single contract. Yeah. So no, if you're buying the share, if you're buying the option for $1, it's $1. Okay. But again, remember, it's $1 because it was so out of the money that it's ridiculous. There's no intrinsic value there, right? Because you're expecting it to go a lot higher than where price. Look, you have to remember that vast majority of traders, they have no clue where price is going to go. Okay, so when you have Tesla at, let's play it. Okay, this was Tesla. Okay, let me just play this for you. This is Tesla moving up, blah blah blah, you know, coming here, creating that candle there. Okay, and then you have that. Okay, so this is Tesla. So remember, price is here, and it hadn't surpassed the previous highs. How many traders were looking at double tops? Okay, how many traders were suspecting that that was going to happen? To buy an option that would allow you to purchase Tesla shares at $1,000 when it's $870, it had not yet surpassed the previous highs. To your average trader, that's a very low odds option to have, you know, to think that it's going to be successful. It's very low odds, because not only does it have to move up, okay, it has to move up a lot higher than $1,000 for that option to be extremely worthwhile. Okay, so that's why it's going to be very cheap. So, but that's why a lot of people do buy cheap options, because they're cheap and they think, oh, if it goes in the money, then I can make a lot of money on that option. Well, yeah, if you know what you're doing. If you don't know what you're doing, then that option is going to go to zero very quickly. With expiry, you can be correct, but lose money. Yeah. Well, yeah, you could, because it depends on how much value was in that contract that was associated with time, right? So that's why, you know, if I was going to, when I was trading options before, I was trading weeklies, okay, but I was day trading, right? I was looking at when price was coming into demand zones, buying weekly call options and making, you know, a little bit of money with just that move, that little bit of move up off of demand, and I used to just cash that in. But I think there's multiple ways to trade options. There's good ways, short-term ways to use weeklies, but I also think waiting for higher time frame areas of demand to be contacted, like Moderna, okay? Moderna has a higher time frame area of demand contacted, and this presents opportunities to get into trades. I was looking at January 350 calls right here, okay? January 350 call options. Why 350? Well, take a look at this here, right? This is the point here that we had a significant drop from. But we have major demand right here. So if there's going to be a move up, it's very likely going to head here and then surpass it. There's no reason why it wouldn't surpass it. It's just, you know, very high odds. Now I'm getting in early, okay? And here's another thing that I want to mention to you guys, okay? I was doing some thinking about this, because as I've been telling you guys, I've been going through my notes that I've kept from back in the day when I was trading options and learning about them. And one thing that you will also learn is that when volatility is low, the option premiums are low, okay? And that's a good thing. Why is that? Okay, so when you have a big significant move take place in a market, okay, because there is movement, all right, and because options contracts have an element of time that's involved in it, meaning there's, you know, you've got an hourglass that's been turned upside down and the sand is falling through. So you got a certain amount of time that these expectations have to be met before, when time runs out, that contract will run out, okay? And it could run out as worthless if it hasn't met the price points that you were expecting from it. So knowing that, when you're buying an option, what you need is movement in the markets. All right, you need price to be moving. When price is moving, it's working on your side as a buyer. So when the market is moving, the premiums, the cost of the contract is going to be higher. Why? Because you have the odds stacked in your favor. Okay, when the markets aren't moving, when volatility isn't high, the premiums, okay, the cost of buying the contract is lower, because it makes sense. You need the markets to be moving for it to work out in your favor. If they're not working out, they're going to charge you a little bit less because the odds are stacked against you. Now, knowing that, and knowing our system and how our system works to give us the highest odds, all right? So we had this, let me just show you something here. This is very cool. So we had this big drop here. What do you think volatility was? High or low? Low. Exactly. So, what do you think was happening here with volatility? High or low? Sorry, high. Low. High. Volatility was high here. Okay? What do you think that is here? It's high as well. What am I doing? I'm writing wrong things. Volatility was high here as well. Okay? Because of the big moves. All right. So, using our system, we're watching for momentum shifting. Okay? We're waiting for the institutions to show us that they're shifting momentum. So remember what I was pointing out? All right, let's go back to it. Let's show you something here. So we have this downward momentum here. Okay? And what we would be waiting for is for it to shift to an upward momentum. So in the process of that momentum shifting, what do you think is going to happen? The volatility is going to slow down. Okay? That means premium prices are going to drop. So if you know with some certainty that price is going to drop from or rally to this area, okay, you can wait until price slows down, retraces, the institutions show us that they're ready to take this thing to the sky, and then that is when we purchase. Right there. Okay? That's when you get into call options. Why? Volatility is low, premiums are lower, and it's just about to kick in with serious momentum. So, you buy it, premiums are low, momentum kicks in. Guess what happens to the cost of the value of your option? Skyrockets very quickly. Okay, so you get into the option, you buy it at a lower premium, and immediately it starts to go up. All right, exponentially, because now you're heading towards the 350 mark, and then it continues. And as it goes in your favor, the value of it just skyrockets. Okay, so when I took a screenshot of this, volatility was somewhat high, okay, because it had just dropped, right? It's just creating the base now. So volatility was somewhat high. So I think it was at, I don't know, 325 or whatever was the bid, 325, if I'm not mistaken. I can double check in 2 seconds. It was for MRNA. 325, bid, ask 365. Okay? That's what it was. So volatility was still higher. So you see how much it dropped. Price is pretty much at the same area, but you see how now it's $2.57. Okay? From 325 to 257. That's quite a significant drop. So just being patient like that, you know, waiting for it to calm down, because we do have an institutional area of demand that's been contacted, so we don't need to get in very quickly. Just wait, let them show us the proof that they are accumulating a position, which is going to slow price down, which is going to bring down the volatility, which is going to bring down the premium. And then when they prove to us that they're going to come in with some strong buying, before they come in with the strong buying, because the initial buying is strong but not extremely strong, it's the secondary drive that is really the most powerful. And that works perfect with our system. Okay? That just works so perfect with our system because that's how our system works. We find the initial boost of energy coming into the market, and then it dies down, and the secondary boost, that's when we get in, and that's always where the stronger push forms from. All right, so yeah, looking good on this one. Pfizer, ooh, look at that. Big news, I guess. Booster shots, everybody's getting their boosts. So now we're seeing a nice drive up. All right. So let's save that. And let's go over to the other chart. You guys want to look at gold. We can take a look at gold. Gold. Okay, so what were you looking at here? Gold broke the support as you discussed yesterday. Support. Which area are you speaking about? You talking about this area here? This area here? The area? I can't remember which area I was talking about specifically on gold. But yeah, we see a nice push to the upside. Not bad. Not bad. But we're still waiting for this one. We still haven't had our signals yet. Okay, we still haven't had any signals yet. CADJPY, look at this one. Look at that one. Created supply. Now retracing up to that supply area. What's going to happen? Let's take a look. What's happening with the USCAD? It dropped down. Did we have we had something just released, didn't we? Something just came out. What was it, gents? What was it? Sign in. Let me just log into my economic calendar here. Today is November 10th. Tuesday. Nothing really serious. Inflation. No, nothing really big coming out. So we're getting some movement though. From 8:30 this morning, inflation rate. Okay, so let's see how that affected the markets. We had a slight push down on USCAD. Dollar getting stronger, breaking through. Nice. Okay, now we're starting to see the action that we wanted. Okay, and CPI. Did I miss that? Is that considered to be? Let me see my settings. I have high impact only. I have high impact. Okay, anyways. So, okay, so now we're getting that nice push to the upside. We had the daily uptrend. Daily demand came into play, which was good. We liked that, but we didn't like what was happening on the 4-hour chart. Now we got a nice push to the upside. So some strength on the dollar here. Weakness in the euro. Beautiful. All right, now I'm liking what I'm seeing, okay? This is decent now. What we were seeing before was weak. And what are retail traders doing now? Don't tell, oh my gosh, they suckered them in. Wow, they got them because they were getting in short, weren't they? They were getting in short before, now they're getting in long, so they suckered them in. So retail traders were suckered into going long to get out of their shorts and to get in long. Okay? Unfortunately, that's what they got them to do right there. And now we're seeing the push to the downside. So now I'd be interested in looking for the short signals again. Okay? Especially with retail traders getting in long. Now I'd be interested. So we're going to look for that, and I'll post them in the forum. Okay, under the trade signals, we'll be doing that. So that's looking pretty good. How's it going, alpha traders? So that's looking pretty good. Let me see what else we got here. So USCAD. So we got strength in the dollar. We got a dip down here. That's interesting. On the CAD, a dip. But it looks like we should, yeah, new highs made. H4 demand in play. Let's see here. Yeah, very good. Very good. So CAD yen. So it looks like CAD is going to get weaker. So with this demand, with this supply in play here, very likely we see now it continue down to our targets. Very likely. And if you wanted to increase your odds of that move happening, you shift down to a 1 hour chart. Take a look here. Okay? This is what you do. You shift it down to a 1 hour chart, and you do some quick analysis like this. And so you want to increase your odds, you do this. Okay. And what you're going to be waiting for is something like price coming up here. You want it to break through this area. Okay? And then that's your signal to go short. Like that. That's the signal. Alright? That's how it works. That's how the system works. There's a tried and true system of what needs to take place on the charts for there to be chart signals. What are the chart signals again? People ask me, what do you mean by chart signals? Like, what makes a chart signal? The chart signal is when the banks create certain formations on the charts, either removing institutional areas of buying or selling to indicate that they're going to take price in a certain direction. And when you're reading the storyline of price, okay, when we're looking at the charts and we're looking at what's happening on the monthly, what's happening on the weekly, what's happening on the daily, and what's happening on the 4 hour, and what is each of these charts telling us about the overall story of price? That's what it is. What's all these charts telling us about the overall story of price? And so again, if you look at the USCAD, we are seeing the storyline that there's likely going to be a push to the upside until supply is contacted, and then we'll see a reversal. So a weak CAD, right? That's what we're suspecting is going to happen. A weak CAD. So if there's a weak CAD, then that means the CAD yen will drop. Okay? So when you're correlating the markets, it's giving a significant picture of what is likely going to take place with each currency. And then you take what you learn about what's happening with each currency and you combine it with what you expect should take place with the currency pairs. So with this one, we look at US dollar, Japanese yen. We're seeing a push to the upside, which is because of the dollar. Okay? But supply is still in play. We have to remember that. On the dollar, there is no supply in play, but the US dollar, Japanese yen, there is supply in play. Okay? So you have to take that into consideration. What's going to be stronger? What's going to be a more powerful force? Weakness in the CAD? okay, or weakness in the yen. Because, you know, if the CAD's going to be weaker than the yen's going to be weaker, then we're going to get this push to the downside here. So that's what I suspect will happen, because the charts are dictating that, and everything looks to be setting up in that direction. So it's looking pretty good, I think, so far. All right, look what's happening with oil. Interesting. So remember, weaker CAD. Okay, weaker CAD could affect oil. So we have the CAD here, right? We have the oil here right now. So what do you think I'm going to be watching for increased odds? I'm going to be looking at the 15-minute chart. Okay, that's what I'm going to be focusing on. All right, because we have a nice shift here taking place. We have demand coming into play, but because the CAD being weak, you know, going to be careful with that one. Let's see. Still want to see daily candle close lows EU. Yeah, for sure. On the euro, we had the previous peak over here, so we want to see a nice close to the downside. You know, we take a look at the 4-hour chart. There hasn't been anything significant. The downward trend that we had here was not significant, and therefore it broke. Okay, the downtrend broke. So if we get a nice push down here, look at that candle though. I really don't like that candle. The one candle doji from hell. Unfortunately, it just had to be. Complicate matters even more. But this is looking pretty good. You know, we've talked about targets down here for some time now. 113s. And it looks like it's starting to engage in the downtrend that's going to be required to facilitate that move. So watching for that one. Okay. Yeah, so I'll be updating the forum with all these details, trade signals, what to watch for, where the signals are, so that you're aware of why we're looking at those time frames and what we're looking for and the key areas that need to be that price needs to trade through, and so forth. Okay. Pound yen, it's getting there. It's getting there, holding that demand quite nicely down here, isn't it? Yeah. So I'm watching this one as well. It's one that is of interest to me. Pound weakness. Look at that pound weakness. If you take a look at the euro, euro's weaker than pound. So it could be that they'll jump onto pound later, or maybe it's just not going to be as weak as the euro. It's one of those two things, but it does look like over time pound is going to drop. I wouldn't be surprised. And Bitcoin, look what we have here. Okay, 4-hour chart, and it's taken off. Okay, why is that? Well, because of what we always say. When you look at the monthly chart, it's giving you a go-ahead to buy. When you look at the weekly chart, it's giving you a go-ahead to buy. When you look at the daily chart, it's giving you a go-ahead to buy. When you look at the 4-hour chart, it's giving you a go-ahead to buy. Where do you buy? At institutional demand. That's where you buy. And so, there you go. Price is moving up, just like magic. Only it's not magic. It's just how the markets work. All right. So there you go. A lot of information for you to absorb. I hope you enjoyed the session. Like I said, I've been trying to find some time in my day to learn and go through all my options trading stuff, because it's been years. The last time I was trading options was what, 2014, 2015, maybe around there. So a lot has happened, and I've been focusing my attention on many other things, primarily building the Sherlock trading system. A lot of chart analysis, historical chart analysis, a lot of time spending on that. So I wasn't focused on options at all. But as you can see, there's great opportunity for options. So that's why I'm going to start re-educating myself on that. So be patient with me. If I don't have all the answers, I apologize. But I will spend time looking into it and getting the answers, okay? Because what I want to do is I want to start building up a portion of the school that is focused on options, and building a portion of my portfolio based on options trading. So a lot of great opportunities. I don't want to miss them anymore. So I'll be opening up an account with Interactive Brokers soon. I'll be funding the account, and I'm going to start trading options shortly. All right. So hope you join me in the ride. It'll be a fun one, that's for sure. Okay, that's it. Enjoy the rest of your day, everybody, and we will talk to you soon. Have a good one.